Welcome to the Nonprofit Sidekick Podcast. Changing the world is hard work, and nonprofit leaders are wearing all the hats while herding all of the cats, and it can get really lonely. You could use a sidekick.
We think of ourselves as your partners in mastering the unique balancing act of nonprofit leadership. Our goal is to provide insights, coaching, and direction for nonprofit leaders, both the heart and soul of nonprofit leadership and the nuts and bolts of nonprofit management. We're your hosts, Wendy Bertner
and Stephanie Masters. So, welcome to our new episode talking about finance. And in today's session, we're going to create a basic understanding of three really important areas of finance. And the first one is budget. The second is accounting and bookkeeping. And then we're going to talk about reporting. All three of these are not my favorite subjects. So I'm going to ask Wendy a lot of questions about this because this is definitely not my area of expertise.
Yeah, and I think if you're a staff at a nonprofit, you'll find that at least 50% of your board is going to have the same, like, I don't know, I don't want to look at spreadsheets. Or as I had a board chair once tell me, the treasurer knows what she's doing. I trust her. I don't need to read these. So I'm going to hopefully bust that myth that board members and staff members of nonprofits don't need to read the finances. That's the myth. The truth is you do need to understand them.
Okay, great. So we're going to dive into each of these different topics.
All right.
Okay, so the first one is budget.
So the first thing that I want to talk about under budget is please do it. Please budget. Please make sure that you have a sense of what you're going to spend, of what you think you're going to bring in each year. The budgets are not written in stone. They're not necessarily black and white, but they are a good guiding tool. They're a good tool for projections, but then they also are a guiding tool for what you do in your nonprofit. If you have a budget of $10,000 to do X, you're most likely going to do X, what you say you're going to do. If you don't have that in the budget, you're going to be wishing and thinking about it all year and never actually get it done. So to me, the budget is one of those like guiding documents that you need right next to your strategic plan.
Excellent. So what does it mean to align your budget to your chart of accounts? This sounds serious.
So I know it's kind of silly, and non-financial people. And let me say this too. I am not a bookkeeper. I'm not an accountant. I took 2 semesters of accounting in college, so I have a general sense, but I've been the treasurer of a board. I've been the CEO of a nonprofit, so I kind of know them. So aligning your budget to your chart of accounts is what your bookkeeper wants to scream at you all the time. Because if your accounting software, think of it as a spreadsheet, and down one side, you're going to have all of these different areas that you're going to say, okay, we just bought paper clips. Paper clips goes in the office supplies category, right? So you need to have that category in your bookkeeping or accounting software. We often, if we're not familiar with the software, if we're not really accountants or bookkeepers, which a lot of nonprofit founders are, and even EDs that come into smaller nonprofits and have to do this work, maybe we don't know how to change. It's most often QuickBooks, but there are others out there, but we don't know how to change the chart of accounts. So we use whatever they give us. There's always something there for you. But then when you go to do the budget, you don't have the same categories. Where are you going to put those paper clips if you don't have that category in your budget? More so when you go to do reports or you go to write grants. If you can't align those, then you are going to have a hard time. It's going to take you a lot of time to pull it apart and put it back together. Let me give you an example. I once had a grant that we received every year for like 5 years. They just kept funding us. It was fabulous. But for whatever reason, on their budget report, on their budget for the proposal and also for the report, they wanted to see occupancy costs pulled out. So we didn't have it pulled out originally. So we just created a subcategory that said rent so that we didn't have any other occupancy costs, so that we could very easily pull that out in the future because we knew they were going to be a major funder for a long time. So we changed up our chart of accounts in order to do that.
So it sounds to me like the chart of accounts creates efficiency and effectiveness. So rather than looking at different reports or different areas of information, this is a really clear, concise way of being able to pull out the data that you need when you need it,
right,
and making sure that it's consistent.
Right. And your chart of accounts is your framework. for everything else. And that's the point of this point that I'm trying to make, is that you want your framework to be correct. So you don't have to go back and mess with it. You can pull data out of QuickBooks and then you can put it into a spreadsheet and manipulate it, but you don't have to do that every single time. If you can set up your foundational framework to be responsive to all of your needs or most of your needs, then you want to do that.
That's fantastic.
Yeah.
Okay. So this is where it starts to get complicated with the budget. And that is, why should you create a budget for each program or department to be able to, have different people in charge of it?
Yeah. So this is where your budget can become like 3-dimensional sometimes.
Sounds scary.
And this is where it gets scary. Right. But if you can, the reason that this is on the topic list for today is also efficiency and effectiveness. That if you have program leads, if you have department leads, and they don't have a sense of what their budget is for their department, it's just not going to be efficient. You're going to end up looking at your budget, pulling it apart, like all of that. So as you're building a budget, if you look at each of your departments or each of your programs, you want to start there using the same chart of accounts and then going, and then putting it together that way. So you end up with something that is a little bit 3-dimensional, but it's easier to manage and more efficient to manage in the long run.
I think what I also see in this from the heart and soul side is that this also teaches other leaders or department heads within the organization to have a better understanding of how the money is being spent and what are we capable of doing, what are we not capable of doing. And it almost can connect them back to the mission and make sure that they are focusing in on the right things and what are the things that we're capable of doing now versus in the future.
Right. Exactly. And it also gives them some autonomy as department heads. They're looking at, okay, I have, $5 to spend on paper clips this year.
That's it. $5.
That's all you need for paper clips. No, but they really do. They have more of a sense of, okay, maybe they have a swag budget. They get t-shirts for the program participants, whatever it might be. They know this is how much I can spend. I came into a role one time as ED and they weren't doing that at all. They weren't even communicating the budget to staff. So they literally were coming in my office day one saying, hey, we need some more staples. And I'm thinking, this is an organization. There are like 7 people working. It wasn't huge, but it also wasn't microscopic. So like, why aren't they? Why do I have to approve like that kind of thing? And then it turned out something really basic. They just had no idea what the budget was.
Excellent.
Yeah.
So I know that this is your favorite myth to bust, but you and I hear so many times from boards and EDs, I need to keep the overhead really low. So let's talk about that.
Yeah. So 30 years ago, when I started in the nonprofit sector, it was like 15%. So overhead is costs that are like rent, office supplies. In the for-profit sector, salaries are often in that. In the nonprofit sector, salaries are mostly into the program or accounting, if they're accounting, that type of thing. And it was just really pounded into our heads, 15%. And then it started creeping up to 20, which was great, but still not enough. If you look at any for-profit, even if you take the salaries out, that's a really thin margin. And that can affect the quality of your programs, of your mission, of attaining your mission. So they are starting to do research, real research. And about a year ago now, maybe 2 years ago, the first little bit of research came out and they were looking at arts organizations. And it was 35% that the arts organizations that were putting out the highest quality, that were running most effectively, most efficiently, their overhead costs were 35%. The other side of this, when I worked at GuideStar, we collected 990s and posted them on the internet. And that was very, thing to do. It was a very edgy thing to do at the time. Now we're used to it, but this was 20 some years ago. And people would find creative ways to account for things on their 990 in order to keep that overhead column low or that G&A column low. So they would move things around. They would do time studies and like, okay, how much time are you really spending on this budget, which would be admin versus your program? And they were really trying to, instead of the other way around, which is what does it really cost us to do what we need to do? So taking an honest look at your budget and kind of trying to train people around you to accept that it's not going to be 15%. It's just impossible.
And what we see when people do focus on that lower overhead around the 15 to 17%, what we see is that it results in high turnover.
Oh, yes.
And it also it diminishes the mission and the values of the organization because people are cutting corners. They're not doing the quality of the work that needs to happen when they feel like, well, we just have to make it work.
Yeah. The other side of that I've seen happen as well is that they're working longer hours to get the work done because they can't hire as many staff, and then burnout and resentment and all of that. There is also a group of national organizations that if you just Google overhead myth, you can get a lot of really good information about it. GuideStar, or it's now Candid, is one of them, and really trying to stop people from thinking about this in a way that's like, we can't spend any money.
Absolutely. So that was a great segment on budget. So let's move on to my least favorite subject of all time, which is accounting and bookkeeping. This makes me want to run in the other direction, which is why you take care of it for us. But so what's the difference between, budget and then accounting and bookkeeping? Why is this something that nonprofits need to really pay attention to?
Well, they're obviously related. We talked about making sure your chart of account, which is an accounting thing. Chart of accounts is the same in your budget because your accountant or bookkeeper needs to translate that. Accounting is really important in the nonprofit sector. Not only do you want to know where your money's coming from and where it's going, but you have to report that publicly as well as to your funders. If you're doing a startup for profit and you get a funder, you get an investor, they might want to see some of those numbers too. But most of us who are starting businesses don't need that level of detail.
Right.
We that the nonprofits need. So there's actually accounting software built for nonprofits, and I want to encourage everybody to look at that. QuickBooks has it. There are other pieces. Our friends over at MonkeyPod have it. What that does, it allows you to account for your grants better because you're getting into fund accounting, which most businesses don't have to do. So you have to track that restricted funding very specifically, very much. Here's what we spent on it. Here's how we spent that money. Back in the day, some funders would make you put it in a separate bank account and you would just get your kind of bank statements and do it. That was a long time ago. Now we have sophisticated accounting software that helps us do it, but it still is a lot of work and it's really important. So also important in that if you're not the accountant or bookkeeper and you're just working in it, that's why it's so important that when you don't just throw a receipt at your bookkeeper or accountant and say, here you go. You need to tell them what it was for, when it was it for a particular grant? Was it for a particular client? These kind of things are really important because the quality of the data you put into your accounting software is going to predict the quality of the reports that you can bring out in the end. And you have to do those reports. If you're getting government grants, if you're getting foundation grants, you're going to have to do these more detailed reports. So setting it up ahead of time, super important.
Well, it also comes back to what we talked about with the budget is creating efficiency and effectiveness.
Yeah.
Finding the information quickly, having it really clear so that people can use the data for all of the different reports and even, talking to the board and creating strategy. It's really important to be able to talk about those numbers.
Yeah. I think the theme of this episode of the podcast is do that work up front so that it's easier in the long run. Take the time to do the budget, do it well. Don't just throw it together based on last year's budget. Really think it through month by month. Use the right software that can really allow you to do that because then when you report out, it's so much easier. It is practically hit a button. Like you always have to adjust it a little bit, but it's so much easier. It's also so much easier to understand for people like you who don't really want to take the time to dig in like I do.
Don't want to touch it.
But you do want to see the top level stuff and it needs to be accurate.
Absolutely.
Yeah.
So the next piece that we want to talk about is another myth that we see in the nonprofit sector is let's get somebody on the board or the staff that comes from a banking or finance background and they can do our finance and bookkeeping. So let's talk about that.
Yeah, no.
Just don't do it.
Ask them first is the number one thing I want to say. Ask them first if this is what they want to do, if they're skilled in it. Just because they work at a bank or in a financial advisory or management doesn't mean they really understand accounting, number one.
Mhm.
And number two, or bookkeeping, number two, nonprofit accounting or bookkeeping. So it's really important to have the person that's in that role, whether it's you or somebody else in your organization that understands nonprofit accounting and bookkeeping. I've also worked with organizations that outsource this to a firm, but that's their only nonprofit client, and they don't really understand the idea of fund accounting and why you have to account for things in a very specific way.
You have to really have a strong partner that knows the ins and outs and can
Yes.
explain the why behind how to report it, how to capture it, whether it be in the software or in different reports.
Yeah. So somebody with financial management background, even banking background, they can absolutely help you do some of that projection, some of that, where are we going? What should we do? Making decisions about where to invest your money or that, that type of thing, that they can be invaluable for that. But always ask them first. Don't just assume that if they have some kind of money background that they're going to want to come in and do your books. That's two different skill sets.
Absolutely. So great conversation around the accounting and bookkeeping. So I'm actually going to put the next part of this episode in another bucket of things that are just it escape me as a strength, and that's reporting.
Right.
So, what types of reporting are really necessary in the social sector?
So I think it depends on the size of your organization. It depends on where you get your money from. If you get your money from one place, whether it's all individuals giving you money or you have a particular, sponsor that gives you all your money, your accounting and reporting is going to be much easier. The more diverse you get, the more different grants that are restricted you get, the more difficult it's going to be to create the reports. You're just going to have a lot more reports, put it that way. I shouldn't say it's more difficult. I should say it's just more. So the reports you want to see obviously is let's go back to your budget. How are you doing against that budget? You said you were going to spend X amount and get X amount in. How are you doing? And just because you're not hitting your budget, that's okay. I mean, that's, again, I just want to reinforce that this is not black and white. This really is a guide. So you want to have a budget report. And as a board member, I know you sit on board, Steph, you want to see how are we doing? And you want to know why we're not hitting budget. That doesn't mean it's a bad thing. Maybe we budgeted for this grant to come in June, but the check didn't get here till July 3rd. That's the only reason it's not in the June, so it's not a bad thing necessarily, but there may be some things that you want to see. A balance sheet is very, very simple. It looks complicated, and it is, but like the bottom line for board members that you want to see is, what are your assets? Are you negative? Are you positive? If you have a huge mortgage on a building, you might be negative, right? Most smaller, not like 90% of the nonprofits out there, their balance sheet is just, here's what we have in savings. Here's what we owe people, so it's just giving you a sense of what's your value, what's your worth, right? As we get closer to retirement age, I know I'm looking at it all the time. What's my worth? Can I do this? So it's the same idea. What assets do you have?
And then talk to me a little bit about like cash flow, cash management.
I know most people don't think about this. And if you are in a well-funded organization, you probably don't think of it either. But the reason that I like it is that it can help you do projections. So if you're watching your budget month by month and you're projecting out, this is when I think this money's going to come in, this is when I think this big expense is going to come in, you really have, to me, a sense of calm, right? It gives the board, it gives everybody a sense of, okay, we're doing okay, unless you're not. And then it lights those red flags earlier than, oh crap, I can't make payroll next month. You're going to see it 6 months in advance if you're doing these projections and you're watching your cash flow. The tricky part is that most of your accountants are probably not doing cash accounting. So you have to understand that your other reports, your profit and loss or your budget report, may not match your cash flow report. Because with accrual accounting, for example, if you get a letter that says you got this grant, your accountant's going to take that and book it right then and there. Sometimes it takes you 2 or 3 months to actually get that money. And so your cash isn't going to get it until it actually comes in. So that's why it's important. It's a different way to look at the same numbers.
All right, excellent. Um, so I've heard you do this training, and we've coached people too. But what does it mean to get comfortable with financial projections?
Well, that's kind of what we were saying is
Yeah.
like you want everybody, the board, senior staff, leadership staff, whoever needs to be really involved in that. You want them to understand the difference between your profit and loss report, and which is kind of like your budget. How much did you bring in? How much did you spend? But it's a longer term looking to the future. So what do we think is going to happen? And I think it really helps board members feel a little security, and staff, not just board. But it gives you like, okay, this is where we're going. This is what we want to do. The second thing that makes it important is that you're not fundraising for today, which is really hard. A lot of nonprofits are fundraising for today. It's easier to fundraise for next year. So if you know what those projections look like, if you can kind of make that your goal, and okay, here's how we're doing it, and everybody's on the same page, it's just helpful. It just gets that mindset going too, that we're raising for next year, not this moment. It's not crisis fundraising,
Which is strategic.
yes.
So what I hear from that is this is how you lead the organization. This is how you're talking about where we're going versus where we are right now. So it does create clear vision and direction for not just the staff, but also for the board.
Absolutely.
Excellent. Okay. The next one that we want to talk about is carefully following investments. What kind of investments do nonprofits do?
Yeah, no, everything from your basic CD, the to more sophisticated investments. Why I say carefully follow them is again, a couple reasons. One is knowing where your investments are going. So some nonprofits have a specific, let's take environmental nonprofits. They might have a specific mission, right? They might not know that their money that's in this investment account is actually investing in companies that are doing things that they are against. So you want to keep an eye on that. You want to know this might not be an issue for your nonprofit. I'm not saying it should be. I'm just saying for some it is. And you don't want to get caught with, oh my gosh, we have an investment in a company that we're fighting against, right? Susan Komen, famously, this happened to them like 10, 15 years ago. People started uncovering that a lot of their investments, as well as their sponsors, were actually companies that were creating products that cause cancer. So it was this like weird circle of, not good. So you just want to be careful of that your investments. The second thing is just to track them, because we don't necessarily feel like we're savvy. How was that for? I mean, we don't. Let's just say a lot of people in the nonprofit sector are there because of the heart. So we don't feel like we're savvy. So it's like, okay, it's in this investment. So, okay, we'll look at it every quarter or something. But, markets fluctuate, things fluctuate. You should really keep an eye on it. And know also, can you get your hands on that money tomorrow? Or is it the kind of investment that you can't get your hands on that money for a week or a month? Always know kind of what's going on there too.
I've seen that in the boards that I've sat on is talking about short-term CDs or investment versus the long-term, and being able to have those projections and understand how does this impact the bottom line now versus the future. So are we actually harming ourselves by doing these longer-term investments? And it's a great conversation at the board to be able to look at, well, does this align to where we're going?
Right.
And if the answer is no, then you shouldn't be doing it.
Yeah. If you have plans to expand in the next 6 months and put a lot of money into, whether it's a building or programs or something, and all of that money is wrapped up in longer term investments that you have to pay a fee to get it out or something like
penalties.
That's just bad planning, bad strategy.
Absolutely. So I think we've talked about this a little bit, but as a leader within the organization and also as a board chair, being able to understand how to appropriately communicate about the reporting. So can you talk a little bit about your experience and some of the coaching that you've done around helping leaders do this right?
Right. It's really easy to kind of go into your QuickBooks or whatever you're using and hit the button, do your your, 3 reports, your balance sheet, your profit and loss, and your budget, and throw that over to the board. And I'm going to take a really educated guess to say 90% of them are like, okay, great. They might look at the bottom right-hand corner.
Is it red or black?
Right. The bottom right-hand corner, right?
Yep.
Literally the bottom line. How are we doing? Great. If you can take the time and either one, like do some charts, because some people we know learn better visually. So doing some charts and graphs is always very helpful. But I've also found that the most helpful thing you can do is do a cover sheet. Do a cover sheet that pulls off the important things. So that means you as the board chair or the ED need to take the time and read the reports, what's important to the boards. And then I just do bullet points. So, profit and loss, here's where we were, here's what we here compared to last month or last year, whatever kind of comparisons you want to see. Here are the highlights that I need you to know. And then I'll do the same for each of those reports. And kind of at the top, I'll do a bit of an overview like, oh no, we're in crisis. We really need to amp up fundraising, or hey, we're doing great. Right now, this quarter's wonderful. Having charts and graphs and having a cover sheet helps people who are not inclined to like those crazy QuickBook reports.
That's me. Yeah. The cover sheet is the best thing.
I was going to ask you, I was going to turn around and ask you how, I know sometimes you just don't, and it's okay. It's all right.
I go to my happy place when somebody puts numbers in front of me.
Yeah, but you don't. If they're meaningful, I'm gonna challenge you on that, because if they're meaningful to you, you're like, oh, and you kind of dive in a little bit. Yeah. What does this mean? So what's the best way to make, if you're sitting on the board, what's the best way to make those numbers meaningful to you?
I want to know, what's the impact? Why do I need to know these numbers as a board member? And how does it influence the way that I contribute? If I don't know that, I'm not paying attention.
Right. You're going to assume that everything's fine.
Yeah.
Unless you're hearing people screaming, fire, fire, fire.
Yeah. If I see red, I'm asking questions, but I really don't know what questions to ask.
Why is this red?
Why is this red? And, is there an alarm that's going off that I need to be aware of?
And why didn't this alarm go off 6 months ago?
Right.
Sorry, I'm going back to my cash projections.
Yeah.
I'm big on this.
You like those cash projections.
I'm just big on it. Yep.
Yeah. And so the other piece of this that I think we covered just a little bit is, as a board member, understanding where we are in the present and how we got here, and then what is our board responsibilities and how we support the ED and the staff. When things are not going well, or even if they are, how are we communicating it? How are we creating that momentum and sustaining it?
Yeah, I think the board can be fabulous ambassadors, whether you are the type of person that, really wants to fundraise and enjoys it, asking people for money or asking people to come to various events, whatever for your organization. But even above that, people want to know. There's enough stories out there about nonprofits being run incorrectly, whatever that means. Some I agree with, some I don't. But again, going back to the overhead myth, maybe, there's somebody on your board who's just really stuck on that. Knowing what that means to them, understanding the individual and why they're asking those questions is really important for an ED. Just to go to that for a moment, just go back to my ED. I had one board member at one of the organizations that I used to say all the time, I feel like I'm defending my thesis every single board meeting, because she would come in, she had all the questions. So I found myself, that cover sheet kind of blew up a little bit. It became more information in it. And because I started to note, okay, she's always asking the same questions. So I started to put those on the cover sheet, and I felt better about it that way. So listening to your board too, it's like, what do they need to know? Do they see that chart and go, oh my gosh, this is great. Do more of that.
Excellent. So in today's episode, I just want to recap what we've talked about today is first a budget, then accounting and bookkeeping and reporting. And I think we have talked about the dual role. What are things that the executive director or leader of the organization are responsible for? And then what are the responsibilities of the board chair and board members?
Yeah, and we've just kind of scratched the surface of each of those topics, because there are entire, master's level courses on this. But I think the reason we wanted to do this episode was really to bring some calm and to help board members and leaders in nonprofits say, it's okay. You can dive in, you can figure this out. It may not be what you want to do, but it will be very helpful to the long-term sustainability of the organization.
And we hope that leaders walk away with a validation of where
Mhm.
they have this framework in place and then what's the work that they need to do to fix it.
Yeah.
Thanks so much for joining us today. If you need more information or would like to work with us, check out our website at nonprofitsidekick.com.